the weight of the politics on what's happening is not being carefully analyzed and considered in the people's investments right now. It's an afterthought. And what's transpiring in this and the separation and the political paralysis, not just here, but in other places in the world, particularly in Europe. I'll close on this, and maybe it's something to talk that if you have me on again. I believe that we're seeing the beginning of the end of the European Union. David, I mean, I am bearish, but I think that's kind of a vague way. That's fairly, how many months away, and there may be a 10% correction. I don't know if that's a market forecast. I'm from the
Okay,
old school, my friend. I don't know the gentleman, so I don't want to pick on him or anything.
sure.
He might be phenomenal. My feeling about the market is this: if you're interested in the next few weeks or few months, I think that's anyone's guess. I think flip a coin, do what you want. If you want to start talking about multi-years out and resort back to what a stock market ultimately is, which is where you buy part ownerships of businesses, and those businesses will mostly do well or not so well depending on economies, then I would say I'd be quite bearish, because I think things are going to get a lot worse economically, socially, and politically. So I'm not so concerned about the next 10% or 10 weeks. I'm more concerned about the 30 to 50% over the next 3 to 5 years.
I do want to get your thoughts on the socioeconomic landscape of America, but just focusing on the markets for now. Okay, so the markets are interesting. In your many decades of participating in the markets as an investor and speculator and analyst, have you ever witnessed anything like this? And by this, I mean specifically just a few stocks pulling up the entire index. The tech sector has been the only sector outperforming the S&P 500 this year out of the 10 sectors of the S&P. And within that tech sector, it's only really just been a few names pulling up that sector as well. It's just a very concentrated market. Have you seen anything like this?
David, you make a very good point. Probably one of the primary reasons to be at least concerned, if not outright bearish, the lack of following and improvement as those few stocks went up 8 to 9 out of 10 times proved troublesome down the road. But I'll tell you what I've seen that I've never seen before in my 40 years. Given where market prices are, where valuations are, and given what the mood of the market is, the complacency among investors and the so-called professional public, with all the fundamental economic and social factors that one could argue that are as much bearish as they can make an argument of bullish, the fact that there's such a complacency and not a real fear at all that I see at all, even at these high valuations, suggests that what normally succeeds over time, contrarianism, is the thing to be, and be contrary to the popular opinion now that this market's going to just keep going up and up.
Right. Is this reminiscent of 2000 for you?
Well, the only difference is between 87 and 2000 and 2008, there was the ability for the government to step in and bail out if we have a crisis. We no longer have that availability because we became so indebted and we're spending so much money each year more than we have. We will not have the ability to simply print 5 or 10 or 15 trillion, whatever it takes to whatever ends up happening, and have the market accept that as that's a net positive. That's the big change now. I don't think the cards can be played, and one of the big reasons is one of the 5 reasons of my build the arc is that political paralysis. David, here in the U.S., I can only address in the U.S., Democrats and Republicans cannot go in a room and make any worthwhile legislation anymore. And on top of that, they each have a faction in their party that wants to move more extreme away from their center. So I don't believe if and when the next crisis comes that there's the political will to fix it this time.
Okay, what do you mean by this debt issue is going to prevent the government from bailing companies out? I mean, what we saw last year was the Federal Reserve and the Treasury bailing out a couple banks, right? Backstopping bank losses following the collapse of Silicon Valley and a few others. You don't think that's going to happen to the same extent as maybe 2008?
So in the 40 plus years, I've seen 3 major financial crises. Each at the time was perceived as a major crisis, even though if you look at 1987, when the Dow was just a few thousand points, you would say, what big deal was that? But for that time, that was a significant financial crisis. Same thing in 2000 and 2008, but each time, the main thing that turned the turnaround for the market was the Fed acting in a much easier stance, creating all sorts of additional money and, of course, debt creation. The governments can no longer do that without fear, because people have come to the conclusion that we're now getting to the point we may not even be able to make our interest payments. So that card that was readily available in those last crises, I don't believe is going to be readily available for the next one.
I want to come back to what you said about political turmoil. Ray Dalio recently wrote a gigantic article for Time magazine. It's a 50-minute read. I believe we now have to face the fact that fighting for democracy as we know it, with thoughtful disagreement and compromises governed by rule of law, is unlikely to work. People like me who had a long shot hope for the emergence of a strong middle that fights against the extremists to bring the country together and make major reforms to improve the system must recognize that the differences are becoming too irreconcilable for this to happen. And then he goes on to basically say, he wrote an article a few months prior to this outlining basically why there's a 30% chance of a civil war. Anyway, before we go further, I'd like to just comment on what I just read.
Sure. So as we've destroyed the middle class for decades of mismanagement, we've also have basically destroyed the middle ground in the United States. People are at one extreme or another, and those who may remain somewhere in the middle feel helpless and actually fearful to speak up against one extreme or the other. And quite frankly, no matter what happens in the election now, whether Biden stays, whether they replace him, whether somehow he or whoever replace him wins, or Trump wins, about half the country is going to be pretty well mad the day after the election. I don't think the election is going to solve anything. And what I think Ray Dalio is getting at is that because of that and this division, and we don't have to go far, we just have to turn on the nightly news, Dave, and look what's happening in Europe and how that breakup is occurring. Many people feel both Canada and the United States is its next stop. So I think he makes a very good point. I don't like talking about civil unrest. I don't want to wish it so I can point to everybody to see I was right.
Yeah.
I do think it's more likely now than in any other previous time in the stock market.
What has been one of the reasons for this widening political divide over the last couple of decades?
I'm going to give you two answers. I'm going to give you the secular answer, and then I'm going to give you the Peter Grandich answer.
Sure.
The secular answer has been a division of income. It has been realistically where a small percentage of people have become increasingly wealthy while the bulk of the people have struggled due to enormous things that we can speak hours about. That's the secular answer. The Peter Grandich answer is, I believe the more we moved away from the moral compass that a lot of different religions respect, I'm not talking about any other one, and we lived within a means that worked for this country for a couple hundred years, a moral compass is basically gone, and it's spun out of control. And to me, that's when we could talk about whatever subject you want. If we wanted to get down to the rawest reason, that's what I believe we would find. We've lost our ways as a society in the simplest, most commonality where people shared, where it didn't matter really what faith you were from, but you had a common respect and dignity and all that kind of stuff. And that's been dissipated, if not taken out of the equation in many areas of the world, not just here in the United States.
Dalio lists a multi-stage cycle that happens in this changing order of things, if you want to call it that. He says, watch populism and polarization as markers. The more that populism and polarization exist, the further along a nation is in what he calls stage 5. And the closer it is to civil war and revolution. In stage 5, moderates become the minority. In stage 6, they cease to exist. In stage 5, class warfare intensifies. That is because, as a rule, during times of increased hardship and conflict, there is an increased inclination to look at people in stereotypical ways as members of one or more classes. So lots to unpack there. Do you agree, first and foremost, that popularism and polarization usually will lead to more unrest? And is that happening now?
I very much look forward to reading this article because it sounds like, from what little you have read, a lot of it is similar thinking on mine. You know, there's a saying I like to say to people privately, and I'll share it with you publicly. I hope for the best, but I'm praying to prepare for the worst. And that's the reason of the building of the ark. And I think caution, and extreme caution for a lot of people, is very important. And that's why I just want to fall back, David, on this. I don't want to take you away from where you wanted to go, but it's that complacency. Now, think about what you just talked about. I think there's a lot of realistic support to what you just read. I really do. But if we would go out now and have a poll anywhere, at least in the United States, among the financial service industry and listen to those so-called professionals speaking, I doubt we would have heard any one of them, or a very small minority, express anything similar to what Ray Dalio just spoke about. Now, look where Ray Dalio is and look where some of those other people are. I think you have to at least respect what he's saying and try to justify how he may be wrong. I don't heard anything yet that you said there that I greatly disagree with.
What can we do about this? Okay, by do, I mean from an investor's perspective, but also a citizen's perspective.
I think the first thing we have to do is we fall back on how I live in our financial planning group. What's left of what I do in business is planning here in the U.S., and that is I've had a motto for over a decade, almost actually 15 years, that less is more. I lived it myself, David. I could conceivably have a bigger home. I could have a more expensive car. All those things is still to many people a way of life. I think we have to recognize that past generations, yours, family's, mine, did with a lot less, smaller dwellings, not as big cars, all that stuff, but they still got through. I think excess or living and trying to keep up, as we like to say, with the Joneses has led to a lot of our issues. That's the first thing I think we could control ourselves. The other thing is, and again, this goes back to what maybe separates me from a lot of people, because I wear my Catholic Christian faith on my sleeve. I really believe we need to return to recognizing that there's somebody far superior than us, and they're not running for president, or they don't run a big money management firm. And those words and those teachings need to be brought back into line and understood. And without it, I think we're a mess, and we're going to have much bigger problems down the road.
From an investor's perspective, then, what is in this financial arc?
Let me just remind you what makes up why the financial arc. The first is a debt and deficits. The second is a retirement and aging crisis. The third is an immigration invasion. The fourth is the BRICS, and that's a big story you're going to be talking about in the fall, Dave. There's going to be a lot of stuff coming out the BRICS that's going to shock Wall Street. And then the fifth is the political paralysis. Now, in my boat, I think the important thing is preservation of capital now outweighs capital appreciation. Means it's okay, you can still try to turn $1, $2, or $3, but you need to focus more on protecting what you already have than trying to add to it. I think the other thing is that the ultimate crime in investing won't be wrong, it's staying wrong. And one of the things that I feel is, because of this complacency, everybody just assumes that what worked for the last 40 years is going to work for another 40 years. And I'm afraid that's going to be proven pretty wrong. And so I think you have to be proactive now and not reactive. And unfortunately, complacency normally leads to having to react. And when we have to react, emotion gets involved. And Dave, I don't care who you speak to, whatever, if they're willing to admit about their past mistakes, and they've actually made them, I've made a lot of them. Biggest mistakes that I can recall people making were during highly stressful times. And I don't think people have recognized how difficult things may be, and therefore suddenly it will hit them and they will make decisions out of emotion. When it comes to investing, emotion is one of the poorest factors to incorporate into investing decisions.